All right. Hey, traders. Jeremy here. Sunday, October 29th for the trading week ahead. Futures markets are open, and we have this tiny little green candle trying to form here on the S&P 500 futures chart. Lackluster performance so far since the opening bell at 3 o'clock this afternoon. Let's dive in and check out the markets, see where we are and where we think we might be headed in the week ahead. So looking at the S&P, obviously we have lower highs and lower lows. We are obviously in a downtrend here. We have had a very significant move with hardly any bullish action. In the last 11 days, we are down basically 7%, and we only had one little green day here fighting for support right at this 200 period moving average, which is shown in gray. And then bears just came right back, forced it back down. So we are technically overextended to the downside. You can see on the RSI here, we are below the 30 line in yellow here, and it is showing blue, which means we are overextended to the downside that we can probably expect some kind of bullish action coming back into the market. How deep that bearish retracement goes, who knows? It could just be back up to the previous candle high. If bulls really kind of step in and think we are oversold more so than normal, might see it come up to the 9 or maybe even up all the way up to this 200 period moving average. So in bearish downtrends, you typically get the largest bullish moves, single day candles within downtrends. So you can see some of these candles here. This is a huge green candle on the S&P. Another really big one here, another couple of really big ones here. Well, if we go over and we look while we were in an uptrend, there's only really one or two that kind of sniff at that same size. The rest of them are much smaller, much more controlled, usually on the way up. So it's not unrealistic to expect a big pop back up to somewhere around 4,200, 4,215. If we get through that 9, maybe all the way up to 4,265. But at this point, we are obviously bearish, and any bullish rally is going to be suspect, just like it was back here. Just like it was back here, just like it was back here. Any time that we have those bullish moves, until we set a new pivot high, which could be argued at above this green candle here, or if not, all the way back up here at 44.30. So until we break either of those, you are not setting a new higher high, and therefore you are still in a downtrend and must look at any bullish action with a bit of skepticism. So right now, again, we are overextended to the downside. It is expected that either in the next few days, we should get some kind of a bullish rally to have all the short covering. So people that have shorted the market buying back shares that they borrowed and sold to close, and that usually starts the bullish move. And then very aggressive traders and day traders tend to jump on that and push it a little bit higher. But I am expecting that the resistance up here at the 200 period moving average around 42.65 will hold on any type of retrace. And then we would most likely roll over, and if nothing else, at least test down here the lows around 41.50 to 41.22, the low of this candle here. So we are kind of expecting something like that to form. And then if this breaks, the next level would be really down at 40.65 or 4,000. So if we toss this out onto a weekly chart, you can see on the weekly chart, we really don't have any actual support until the 200 period moving average, the last line in the sand here for our moving averages, which is all the way down currently at 39.50. That is a large drop coming back in. That'd be another about 5% down. So looking at this, the line in the sand for the 200 period moving average we were talking about around 42.20 also lines up really well with the 50 period weekly. So it wouldn't surprise me to see that pop come up into that and then roll back over. So that is the S&P. Any bullish action, you must be meeting with skepticism. Look at it as an opportunity to reload to the downside and play the bearish action. And just a really quick lesson here. So let's put this out on a 1-year chart. So looking at the MACD here, this is a moving average convergence and divergence graph. And it measures momentum among other things, but it is very, very interesting to me to look at the relative peaks on the MACD. And so you can see here, before we rolled over in July and started this downtrend, the previous portion of the year, we've been going up, setting higher highs, higher lows, higher highs, higher lows, and we've been moving up. And on the MACD, we were kind of setting slightly lower, equal and then slightly lower highs on the MACD, which is actually divergent against this. It signals that maybe this price action isn't going to be sustainable. Then we did break out. We set a new pivot high here, new pivot high on the actual price action chart. So those two were confirming each other. We had two new highs on it. But then look what happens. We set another high on the price chart right here. But if we go down just directly below it, right here, we actually set a lower high. That was diverging again. So we set a higher high on the price, but a lower high on the MACD. And then that trend has continued. So this divergence here basically told us, hey, this market move is running out of steam. We probably are going to see some profit taking and a rollover occur. And then we saw it confirm with a lower high here, confirm again the lower high here, confirm again the most recent major pivot with a lower high here. And now the RSI, like we said, is overextended to the downside. We still have momentum down on this. We would be waiting for a little bit of a curl up on this blue line and a cross above the yellow potentially, like we had right here, that correlates to this big green candle here for any potential bullish rally. And then at that point, we would be looking to short again. So looking for another pivot high at some point, probably coming back up to this line, and then that rolling back over, confirming our next move down on the MACD. All right, little lesson over. Let's go out to the NASDAQ. So NASDAQ, we are obviously bearish as well. Downtrend, lower highs, lower lows, overextended to the downside, getting a little bit more of a pop here. And again, wouldn't be surprising to see a bullish move come back up into this major support and resistance zone. We had it tested over here, twice here, 3, 4, 5 times this level around 14,580 to 14,600, let's say, has been tested. It makes sense that on the upside, any bullish move is going to hit its head on that and then come right back down. And it's either going to come down and test these lows here, or it can come down and hit the rising 200 period moving average here. So target somewhere around 14,100 on the NASDAQ here. And I'm just going to set an alert for myself actually there, because that's going to be my new target, 14,100. So that's going to be the new target on any rollover that we get, probably up here at the 9, converging with that 14,600 level. Going out to the Russell 2000, we're going to put this on a weekly chart because we can't even see all the data on this. So on the weekly chart, let's just get that text drawing out of the way here. On the weekly chart, we are sitting right on top of support around 1645. This is an incredibly important support level. If this breaks, we really don't have anything until down around 1400 down here. That is going to be our next line in the sand, and could very easily see that occur if this line does not hold. We are overextended the downside here as well. Our MACD is showing bearish as well. So again, it wouldn't surprise me here to see a little bit of a bounce and then a rollover that eventually breaks this 1640, 1645 level. So on the daily chart, coming into the daily, looking probably for a bullish move back up into the 9, followed by a rollover, and an ultimate break of this 1638 level would be the signal to go bearish once again. Finally, going out to Dow Jones for our 4 major indexes. Overextended, but not nearly as overextended as some of the other major indexes. If we toss this out on a weekly chart, we do have support from the 200 period moving average on the weekly around 31,800. And that does line up pretty significantly, pretty well with the previous pivot low over here. You can see right there. So expecting that over the next week or two, we are going to see that 31,800 level test. That is the most realistic expectation for where the market is. Again, we are overextended to the downside on both the daily and weekly, so it would not surprise me to see some kind of a bullish move back up into this decreasing 9, and then a rollover back down to that target. So looking to short somewhere in there. Honestly, between the Dow Jones, the Russell, the NASDAQ, and the S&P 500, I'm mostly interested in the S&P and the NASDAQ, so I'm not going to really be paying attention to the Dow Jones one way or in another this week. Going out to Bitcoin. Bitcoin has been just killing it lately. And you can see here, hopefully this isn't too distracting. I guess I'll remove these and redraw them later. These are some Fibonacci retracements and extensions. If you don't know what that is, you can hit me up in the comments and I can give you a little lesson on that. So we had obviously a massive, massive move right up into resistance around 35,000, has been high basing there, fighting to see which way it wants to go. In that time, while it's been going sideways here in this fairly tight range comparatively to the big move, has given time for this 9-period moving average to start creeping its way up. Hopefully we'll get a little bit more consolidation here, and this line will continue to move up and support that price action and act as a springing board for it to move. And the move would then be kind of the next leg that we would be looking at, probably up to 40,000 and then maybe even up to 45,000, depending on how much momentum it has. Both of those I feel like are in play. And on the trailing ATR indicator that we have here, all these dots that you see on my screen, the week before last was the first one that turned bullish. So we are now 2 weeks into that. And this week is going to be the 3rd week so far. And for that to turn bearish, price would have to drop all the way back down below 31,800, which is a fairly large drop. That would be an 8% drop for that indicator on the weekly chart to switch to bearish. On the daily chart, it would have to drop to basically 33,000, which is still about a 4% drop for that to be able to go bearish. So right now that indicator is telling us stay bullish. Our MACD on here is obviously showing a huge amount of bullish momentum, although it is starting to slow down. And you can obviously see that looking at the chart here in the high base that we have. It is wildly overextended here. So the longer it just high bases and the more days we can get kind of going sideways as we wait for that 9 EMA to catch up, the more it'll give time for this to curl back down and reset and give us a really good opportunity, hopefully, for another breakout. So keeping an eye on Bitcoin and all the Bitcoin proxies. Going out to crude light, nothing really to see here. It is just so volatile, and it is being completely driven by news headlines, mostly around Hamas and Israel and the war that's going on in Gaza. And really, it is super volatile. I mean, huge down day, huge up day, huge down day, huge up day, significant down day, but not nearly as low, honestly. So that's interesting to me. I'm not interested in this, honestly, until we see a break back above and confirm above the 50-period moving average on the daily. And honestly, even maybe above this diagonal resistance line, because even if we do get back above that, that is a significant resistance point from last time that it got tested. So I would want to see a break above that and maybe see a break come back up to the previous pivot high over here. And then let's say maybe pull back and retest this diagonal line and then go. So that would be kind of the pattern that I would be interested in crude light. Who knows if we will get that or not. But it would be interesting to me to see a push up to 90, a pull back down to maybe 88 or so, back into this diagonal resistance zone, and then playing the new break out of 90 from there. And the reason that we like that is if we had that move higher, the pullback, and then a break, instead of starting down here, and when the price came up and broke through 90, we would have to have our stop way down here at 82. And in the futures, that is a massive, massive risk to have for the trade. And we'd actually have less than a 1-to-1 risk portfolio, because we'd have about 7.5% risk at $6.85. And then our target would be up here at $5. So we wouldn't be able to get the risk to reward here to justify that. But if we came up to 90, this previous resistance, pulled back and set a new higher support zone, and then moved, playing the break in 90, all of a sudden we would have a $1.90 potential risk, because when we entered at 90 here, we would have our stop below that. And then for that $1.90, we would potentially be able to make $6 on the upside. So we'd have a 3-to-1 risk to reward. So that would be very, very favorable. So that's just one of the things that we as traders always need to be looking at, is where are our stops going to be placed? What do we want to see develop in the charts? And then watch for it, set alerts for it, and wait and see what's going on in the chart. And if we get what we're asking for and we are prepared for it, we can place our trade and make some money on it. And if not, then we have to wait for the next setup to come along. So right now, I'm not interested in any of the choppy mess down here. It really needs to take a bath, clean itself up. So we are waiting on that. I do have an alert set in case we break back above the diagonal resistance. And then I'll reset my assessment. From there, what else do we want to look at? Let's take a look at gold. Gold has been on a monstrous tear. It has raised about 11% in the last 21 days, got a nice high base here, broke out higher and closed above the 2000 level, which was really, really important. But now we are pressing right into resistance here at 2022. And honestly, probably need to either see a continued snapback retracement back into kind of the top of this channel here and back into the 9. I wouldn't mind seeing a pullback to maybe 1990 and then reloading to the upside there, or alternatively just going sideways here for the next like 4 or 5 days, again letting this 9 EMA catch up and then triggering above the previous candle high here. But gold has a really strong thematic backing right now, with the wars that are going on, with inflation, with the US dollar being so incredibly high and hopefully topping out here. It did come back up and test, and now we are obviously in this big kind of sideways chop, anywhere between $29.57 and $30.07. So this is just neutral, anywhere between those two ranges. If it does break out above here, obviously that would be bullish for the US dollar, but bearish for equities. And if we do break down here below 29.57, I actually need to adjust that alert. There we go. Below 29.57. Then that would be potentially bullish for equities, as the US dollar sold off and kind of made it a little bit easier to price and buy things, not as expensive. So last couple of things, let's look at the advanced decliners here. Obviously, when we are advancing, we want to see more stocks making higher highs than lower lows. Right now, we see the opposite. We see a lot more stocks making lower lows than higher highs. In fact, we closed on Friday and we had 1,400 more stocks creating lows than we did creating highs. So that is not great, obviously. And then finally, for the AR high low here over the last month, this is kind of similar reading here, and this was showing that negative 742. And to be bullish in our portfolio, we need 2 closes above 50. So obviously, we are not even remotely close to that. So wrapping up here, let's go out and look at the economic data for the coming week. Nothing on Monday. That's great. Gives us a little bit of a reprieve. We can check in, see how the market's doing without any news chaos. On Tuesday, we have consumer confidence and Chicago PMI data. Those are both going to be very important. Wednesday, we have a splattering of things, but honestly, the federal funds rate in statement is going to be the most important, followed by the ISM manufacturing PMI data. That will be important. Thursday, unemployment claims, and Friday, average hourly earnings, non-farm roll, unemployment change, and the ISM services PMI data are all going to be important. And then finally, if we look at our heat map for this previous week, we have switched this to 1 week performance. So this is showing the total percentage gain or loss for stocks over the course of last week. And you can see lots of red, and not only lots of red, but lots of big red movements. You see Google down 9.7%, Meta down almost 4%, Tesla down 2.2%, Adobe -6%, Apple 2.7%, MasterCard 5.2%. So huge moves to the downside. Chevron -13.4% on the week. So obviously, looking at this, bears are firmly in control, and you need to position yourself accordingly. So that is where the money is being made. So position bearishly, look for bearish trades and bearish setups, and obviously view any bullish rallies as suspect and opportunities to reset up for short positions. Finally, last but not least, let's go out to our earnings date and look to see in the week ahead what we are going to have on the docket. So this coming week, we are going to be going, what is the date here? Hold on 1 second, guys. We're going to be the 30th to the 3rd. So looking at this, anything that is between the 30th and the 3rd that shows in pink are going to be ones that report this week. So we have Qualcomm, we have AMD, we have Apple. That's going to be a big one. What other big ones do we have? Caterpillar's big. Eli Lilly is huge. Amgen, Pfizer. So quite a few, ConocoPhillips and a number of other gas plays, energy plays. So big number of companies, big influential companies reporting earnings. So stay away from trading anything that I just mentioned there, because you don't have an edge unless you are going to play specific option strategies for over earnings. There's just too much chaos for earnings. It's too unpredictable. So for regular swing trading, do not try to play that unless you have specific option strategies that you are comfortable with. All right, guys, that is it for the week, and enjoy the trading week. Let me know, as always, if you have any questions, and please like, share, subscribe. It really helps me out. I'm trying to build this channel and trying to add value for everyone here. So if you know somebody that is interested in learning how to trade and think that they might find some value from what I'm up to here, please share this video link and like and subscribe, and encourage them to do the same. It would really help me out. Really appreciate you guys. And as always, I'm here to help. Talk to you soon.